Alright, quick update on Solana. So we're coming up to 112. This is the most important level that we've been talking about for literally ever. I mean, we started making content on Solana about 2 months ago, and we've been talking about 112 since we were all the way down here in January. So if you don't know where the 112 comes from, if we draw our fib from the low of the bull market, all the way up to the all-time high up here at $258, you can see that we will have this 618 Fibonacci retracement region around the 112, and this is the most important level. Obviously, being above the 786 shows that the market is bullish, but being above the 618, which is the golden pocket, is the most important level to be above, in my opinion, if you want to argue that a crypto or a stock or whatever you're analyzing is extremely bullish. Now, we have run into it today. We are just stuck beneath it right now. You can see we basically ran above it, and this was resistance, which we obviously expected because we did say that 112 is the most important level. You can see we've clashed against it for the past, let's see now, for about the past 15 hours. We're on the hourly candle, so this is definitely a strong line of resistance that we do need to break. Now, if you've been watching my videos, you know that I've been saying since all the way down here when we predicted this triple bottom structure and a massive run up, that we have been talking about finally getting into Solana and leverage trading. We did the same for Bitcoin. If you watch my Bitcoin videos as well, you know I've been talking about how I've been sitting on the sidelines waiting to long once we did break 46,000. I made a video on Bitcoin this morning to let you know that we are longing, and so far that's played off pretty well. So I do think a similar effect will happen on Solana once we do manage to break the 112. I do look forward to longing Solana once we do break this 112, because personally, I haven't actually longed Solana before. I haven't leverage traded it. I have just been buying and accumulating since we were around this region. I wasn't even in Solana for this first bull run. I wasn't in for the all-time high. All of my buys have been around the $80 to $90 region, some at 95. And also I do have like a small business where I do take payments in Solana, so is what it is. We are accumulating Solana. If you watch my channel, you probably know that already. But what's going on today? We have got a decent amount of buying volume coming in. I mean, we've been talking about this in the last few videos that we do have an okay amount of buying volume coming in right now, and I do think that the buying volume will increase once we do hop above the 112. So I've got my eyes on 112. Once we are finally able to hop above the 112, personally I will be longing. Now, we had our first price target. We've been talking about this for the past week or so since we triple bottomed, how we were going to have basically a 40% increase up to the 112 or the 618 Fibonacci retracement. This was a 25% increase the last time we measured it. Obviously we have pretty much filled this now, so we can get rid of this and now start talking about my personal next trade. Obviously this isn't financial advice. I'm not telling you to trade with me. This is just how I personally plan on navigating the markets, and you can see this may taper off a little bit if we do take our time to come up to it, as the 200-day moving average is slightly slowly moving down now. But I do have my eyes on this next trade. This is all the way up here at 150, which is basically a 35% breakout trade from this 618 region. I would be taking a small amount of profits on this 0.5, around about the $140, but all in all, I do expect that for us to be coming up to this $150 in the next couple of weeks or so. And we've been predicting this 150 because you can see, if I zoom back to the macro perspective, you can see Solana's first bull run, we had a massive run up. We made an all-time high, came down, one bottom, two bottoms, triple bottom, and then we had a massive rally all the way up to the all the way up to the current all-time high. Now, this correction from high to low was 69%. This correction, I believe we measured to either 70 or 71%. So this was one of the many reasons why we were highlighting this triple bottom structure, and why we think personally, or why I thought that this was the bottom region and we are going to explode up to the 112. And you can see that so far that's been a pretty great call. We have already fulfilled our target because we came up to 114, but like I said, for my next trade, which will finally be me longing on leverage, I will be looking for a break above the 112, come down, a back test of the 112, and then a big push up. You know, like I said, maybe this will take a couple of weeks, so the 200-day moving average will taper and our target will be around 145 instead of 150. But nonetheless, that doesn't matter. That's a hypothetical. We can talk about that closer to the time. But nonetheless, like I said, my next target is this 200-day moving average. You can also talk about this 0.5, which I said is around here at the 140, but I do think once we get above 140, once we get above 150, we're going to have a pretty sharp tear up. The only other region I see getting in the way would be 191, which is the 618 from the high to the low. And then I do believe that we will be taking out the previous high round about the 260 region. And then we can really start talking about these massive extension targets of 369, 547, 724 and $834. So obviously these are not targets for the next couple of days, they're not targets for the next couple of weeks. I don't even think they're targets for the next month or so. I think these are very big macro targets that we are going to take our time to get to. Nonetheless, like I said, in the short term, everything's starting to look good. I mean, we're having an increase in volume right now. This is really what we wanted to see. If we come down to the weekly, you can see that we do have a lot of room to move up on both the RSI and the MFI, which is the money flow indicator. And if we hop over to the Heikin-Ashi candles, this is where it gets really interesting, because Solana seems to really respect the Heikin-Ashi candles. Now, if you don't know what Heikin-Ashi candles are, they basically mean the average candle in Japanese. I have made a video on how to use Heikin-Ashi candles, but just briefly, what they are really is they're candles that define an uptrend or a downtrend much better than regular Japanese candlesticks. So if you look here, you can see once we turn green, we had this huge rally all the way up to the all-time high, and we knew when to sell when this closed as a red candle at $211. So the Heikin-Ashis didn't catch the exact top at 260, but it did call to sell at 211. Now, just in case you're wondering why I've brushed over these two red candles, in my personal opinion, when I do Heikin-Ashi analysis, I don't count doji candles. And if you don't know what a doji candle is, it's a candle that has a relatively flat body. Sometimes it can be thick, but the kind of general picture of it is it looks something like this. It looks like a spinning top or a spinning coin, where it's got a big wick to the upside, big wick to the downside, and then a little body in the middle. Sometimes it can be fat, sometimes it can be thin. That's not really too important, but you can see if we ignored these green Heikin-Ashi, or sorry, these green doji candles in the downtrend, then the downtrend only, or the uptrend only started once again around about this $90 region. So this was telling us to buy after the first weekly close at $97. Similarly, if we looked at these green Heikin-Ashi candles on the macro term, like I said, we knew when the downtrend was starting to happen at $211. And what's so important about this on the Heikin-Ashis is that we have started to turn green. It is almost, or it is actually the start of the week, so we've had our first green Heikin-Ashi candle. So this is very important for Solana. In my opinion, this is 100% the bottom. Obviously, I don't know if I should say 100%, I think 99.99% sure. This is the bottoming structure simply because of the way how Solana very much respects the Heikin-Ashi candles. Previously, this has worked throughout the entire bull run here. And yeah, I do think this is the bottom for Solana. I think we're going to smash through the 112 with ease. Maybe it's going to take another day or two, but nonetheless, I do think we're going to smash this. If we look at the weekly Heikin-Ashis, it is definitely showing that this downtrend has subsided. And like I said, in my opinion, if we come back over to the daily, switch back to the Japanese candlesticks for ease of use, I do think that we are going to smash this. And once we do, I will be making my leverage trade all the way up until I take my first profits, maybe 40%, 50% of my trade taking profits at the 140, and then I'll be taking the rest of my profits at 150. Do bear in mind, when I say taking profits, this is specifically for this leverage long trade that I will be making, and I will be trading in Solana on a Solana pair, meaning that I will get paid in Solana for making this trade, because I don't want to accumulate more dollars are shit coins. I want to accumulate more Solana when I do make trades in Solana. So that's that's all I see for Solana. Do bear in mind when I say I'm making these trades, this is just my own personal plan of navigating the market. I don't recommend that you do this trading with me. I recommend that you do your own analysis, watch other YouTubers, and get, you know, a plethora of resources from a lot of different people, because I don't think you should just listen to one person. That's just me, but like I said, none of this is financial advice. And yeah, if you are holding Solana, best of luck. Once again, none of this is financial advice, it's just my own opinion on the market, and you've always got to do what's best for you. Okay, way out. Peace.